Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of corporate America, and sometimes it is not as glamorous as it sounds. Get ready for a peek behind the curtain at a company that is making some interesting moves with its stock options. This report is all about new stock grants for key people at a company called StableX Technologies Incorporated. We'll break down what this means and why it matters for investors and anyone curious about how executive compensation works. And hey, before we dive in, if you love getting straight insights from these big corporate filings, make sure you are subscribed and join our Discord community, linked in the description below. So on the 31st of October 2025, the big bosses at StableX Technologies Incorporated decided to give out a bunch of stock options. Think of stock options like a voucher that lets someone buy company stock at a set price today, even if the stock price goes way up later. It's a way to pay people and get them excited about the company doing well. The main guys getting these options are the Chief Executive Officer, Joshua Silverman, and the non-employee directors. We're talking about Sebastian, Giordano Zivi, Joseph Greg Schiffman, and Wayne Walker. They are essentially being rewarded for their work, and in hopes they will continue to work hard. Altogether, these options give them the right to buy over 311,000 shares of StableX Technologies Incorporated's common stock. That is a pretty significant amount. Specifically, Mr. Silverman gets options for up to 220513 shares, and each of those non-employee directors gets options for up to 22,723 shares. Now here is an important detail. The price they can buy these shares for is set. It is either $6.25 per share or whatever the stock is worth. On the day they got the options, whichever is higher. This is a common practice to ensure the options are valuable and incentivize future growth. And how do they get these shares? Well, a big chunk of it is immediate. 75% of the options they received vested right away on the grant date. That means they can exercise those options almost immediately. This is a big incentive to bring people on board or reward them for past performance. The remaining 25% will vest on the 31st of December of 2025, but there is a catch: they have to still be working for or providing services to the company on that date. This is to make sure they stick around and continue to contribute to the company's success. Everyone loves a good vesting schedule, right? Let's look at the broader picture for StableX Technologies Incorporated. Their common stock is traded on the Nasdaq stock market LLC under the ticker symbol SBLX. It's pretty standard stuff for a publicly traded company. The company's common stock has a par value of just 1/10,000th of a cent. This is a purely legal accounting value and does not reflect the actual worth of the stock. What really matters for investors is the trading price and the company's performance. So what does this all mean? The board of directors is clearly trying to align the interests of their top executives and directors with those of the shareholders by giving them stock options that increase in value as the stock price rises. They are incentivizing everyone to work towards growing the company and boosting its stock value. It's a classic strategy in corporate compensation. Now, looking at this filing overall, it tells us a story about leadership incentives. StableX Technologies Incorporated is giving its key people a stake in the company's future success. The immediate vesting of 75% of the options means the leadership team is already holding a significant stake. This is generally a positive sign as it shows commitment and a belief in the company's prospects. However, it is important to remember that stock options are just one piece of the puzzle. The true performance of StableX Technologies Incorporated will depend on their business strategy, their competitive position, and their ability to execute their plans. We don't have their full financial reports in this particular filing, but the granting of these options suggests confidence from the board. A potential risk here, though, is if the stock price doesn't perform as expected. While the options are an incentive, they can also become worthless if the stock price falls below the exercise price. So the real test for Mr. Silverman and the directors will be how well they can navigate the market and drive the company's value up. In conclusion, StableX Technologies Incorporated is using stock options as a key tool to motivate its leadership. It is a common practice, but one that always warrants a closer look at the company's underlying performance and future outlook. This filing gives us a glimpse into their compensation strategy and their focus on rewarding success. Alright, that is our quick decode of this corporate filing. What do you think about these stock option grants? Do they signal a bright future for StableX Technologies Incorporated or just a standard compensation practice? Let us know your thoughts in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more. And don't forget to check out our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next one.